Okay guys, very good morning. Welcome to the briefing then for Friday the 9th of September. Firstly, just taking a bit of a recap on some of the market moves that we had yesterday. We'll have a quick look at some of the things that have come out overnight from a news perspective, some data we've already had out of Europe as well, and then we can look at the day ahead and what to expect. There's a couple of charts that I am sharing at the moment. You've got the euro at the top. Now, of course, we had the ECB interest rate decision and press conference yesterday. You can see the bulk of that activity I'm just highlighting here. Overall, pretty boring, I would say. I mean, that's kind of minimal type price action that I'd say you'd normally see during an ECB event. Obviously, the first kind of moves that we did see were generally euro strength. And it was almost like we were saying in the preparation ahead of the event. It's not what he said, it's kind of what he's not saying that's the key. The part where he said no additional stimulus is needed at this time was actually him providing surprising clarity on the situation. Normally, he's very careful with his words, but he said that with one of the first responses in the Q&A session, and that's what caused one of the most, I guess, opportune times to trade that event. That was when the euro did see initially some of that upside strength go through. It went as far as well as saying that the ECB did not have any discussion as to the extension of the asset purchase plan, instead choosing to focus just more on the kind of implementation and operations of putting forward the existing processes. So whether or not we believe him in that they haven't had any discussions, that's very unlikely. But not giving away too much, the more tactically or communicated the way that he averted or questions in regards to tweaks to the program going forward, he just said that that's being reviewed by the committee and will be presented to the governing council. So essentially passing the buck and kicking the can down the road. Remember, it's not so much if, it's more a question of when. Because as we covered yesterday, there's this scarcity of bonds for them to buy as part of their QE program, which is the issue for them. And if they are going to extend the duration of this program, they're going to have to make some changes technically to the way that eligible assets are kind of shaped within that program. One interesting thing actually, just to quickly look at, that we've had this morning in the context of Europe, and another reason why the ECB ultimately are going to have to take further stimulative type action. If I just switch my screen here, you've had German trade balance this morning, and what I'm sharing with you here on this graph is German exports. It doesn't take a North Korean nuclear scientist to work out what's going on here. This is an absolute, real break out of the statistical norm for this particular piece of data. And quite interestingly, when you start putting the pieces of the puzzles together, when you think about Germany, really their economic performance has been quite weak. Industrial production in Germany took an unexpected lurch lower in July. Factory orders also came in below expectations, and purchaser managers' indices have also proven drab. So the data's not great at the moment coming out of Germany, although it's not having, I would say like this morning, a real direct impact on the market. Certainly this is going to shape what the ECB will be looking at and then what they'll be doing in the months to come. Again, as I say, them extending their QE program really is just a matter of timing now, whether they do that next month, ex-Weidmann voting, so removal of your most hawkish member, or whether that happens later on in the year, December possibly. Going back to the other charts, then moving on, crude oil was obviously an interesting asset yesterday, chiefly because of this move that we had. This came at 4 o'clock when the Department of Energy's crude oil inventories hit, and of course, if you remember, that number was a drawdown of around a drawdown of 14.5 million. As you saw yesterday, that's the biggest or the second largest drawdown ever and it's the last time we had one of that similar sort of size was back in 1999. Reasons for that, I'm not sure if any of you have managed to speak to Steve, but we do have a new member of the Amplify team, Steve Duggan, who's going to be working out of New York. So we welcome Steve to the team, and he's going to be jumping in trading live in the future, in the weeks and months to come, from time to impart his wisdom. He's like Will and Piers, a very experienced trader, so I'm sure he's going to have some good insights to add. But talking to him yesterday, obviously he's just flown over from the States, and he was talking about the fear of those storms in the Gulf. Actually missed New York, or Manhattan so to speak, but certainly did impact the Gulf. And what he was saying was that there was a lot of sort of pent-up demand, people buying, let's say, stocking up on fuel ahead of an expected disruption in regards to forthcoming bad weather pattern. And so that may have contributed then to the significance of the drawdown. But again, this is kind of I would say, an anomaly because of the weather. And so, I wouldn't be expecting such similar size type numbers to be a long-lasting affair. It may impact for the next week, but unlikely to continue to that kind of size for months to come. The other interesting chart, which I'm sharing here with you guys at the moment, is T-notes. Now, I was just looking at T-notes because I was away last week, and I remember we had a couple of bad data points. I think it was the ISM, the manufacturing situation. Then you had non-farm payrolls. You've had also as well other data points which have been similarly weak in terms of the US. And just looking at these kind of ebbs and flows that we've had in treasuries. So this was that bad US data. Then you had non-farms with that brief spike. You go on and you kind of, as Deutsche Bank have said, if you've read your note from Jim Reed this morning, look at T-notes from where we are exactly to the point now to these bouts of volatility that we've had when people have kind of, I think, thrown off the possibility of a rate hike because the data's been weak. Well, in effect, T-notes have not managed to hold on to any of those gains. They've been relatively short-lived. The move that we saw back on the 6th, quite a powerful upside move. I think it was the non-manufacturing ISM was really weak. That's already been reversed, and here we are. I still think the markets are a little bit underpricing of the possibility of a September rate hike. I myself do not think that they will do it, but I think the market is a little bit complacent as to possibly the odds of it occurring. Deutsche in a note this morning saying they think possibly it's more closer to 50-50. Because let's not forget, the Fed are telling us they want to hike and they're going to hike. It's just that we don't believe them. We shall see. That meeting coming up shortly, but a very interesting point here, if I just change my screens, is check out the calendar. So just in the, I don't know if you can see it, in that corner. So basically, the dates are very important now. So it is currently September the 9th. The Fed meeting is a 2-day event. It starts on Tuesday the 20th, and it has the announcement on the 21st. The Fed then have now Saturday, Sunday, Monday, and then they go into their blackout period where no Fed speaker can talk to the press for a period of 7 days ahead of the sit-down meeting that commences then on the 20th, then the announcement we get on the 21st. So the Fed, in effect, have only got a couple more days to really communicate what they are going to do in September. Now, this is important because there's a speaker called Brainard who's speaking on Monday, and Monday is the last day for the Fed to communicate. Now, Brainard is a dove. So if Brainard comes out and is hawkish, I think we have to lift, I think, a little bit the expectation in regards to potentially a September hike occurring. So just watch out for these Fed comments. They could come. I mean, there isn't anything scheduled, I think, for today. As Rosengren is later, so that's also going to be a key one. So just looking here, Fed's Rosengren is a voter, so obviously takes greater importance for the market, and then is a leaning dove. What we're looking for here are any signals. If a dovish person remains dovish, not only is that, well, normally that would be non-market moving, but it's going to come in the context of everyone. The message the Fed are trying to tell us is that they're being hawkish. If Rosengren, who's a leaning dove, starts to be hawkish, and Branard on Monday, we just spoke about, is hawkish, and they're both doves, then certainly I think the Fed are trying to lift these expectations, and September is definitely live. So things to just contemplate. Okay, another story as well, just to round off, is you probably saw this headline, read about it this morning. A shallow earthquake detected near North Korea's nuclear test site. This is the map you can see. So it was a magnitude 5.3 quake. The problem is it wasn't an earthquake, it was artificial, i.e. it was a nuclear test of sorts. Now, this isn't a new occurrence. This is actually North Korea's 5th nuclear test that they've done. It does come with President Obama's made a bit of an Asian tour. There's also an anniversary, I believe, from the country's founding. This sounds like a pretty punchy headline, but in all reality, it doesn't really have too much of a wider impact on the market. The only impact that it does have is, for those of you who don't know, the KOSPI is the name of the Korean stock index. That did come under pressure. And the other currency, well, you tell me in the chat, what other currency moved, do you think, other than the Korean won overnight in response to the nuclear test from North Korea? Yep, Patrick. Good speed. The Japanese yen. So the yen actually weakened, and you can see here yesterday, that actually assisted the Japanese Nikkei stock index overnight, which obviously the exporters benefit from the weaker yen. However, we strengthened in the Japanese yen overnight, and that was predominantly on the back of increased fears. Their foreign ministry has already been out overnight condemning what's happened, and they're looking into possibly further pushing of sanctions and so on and so forth. So the Japanese yen is certainly one to watch when you are dealing with this kind of news. But in terms of it moving, let's say the S&P, the DAX, very unlikely. Okay, wrapping things up then, a quick look at the calendar for today. Overall, I'm afraid it's fairly quiet. You've already had that trade balance come out of Germany. As I said, exports, a bit of a disaster. French industrial production also quite a bit weaker than expected, minus 0.6% month on month. Expected was for plus 0.2%. Will saying Brexit. Yep, I mean the UK is performing well, but Europe is starting to show a couple of signs that things might not all be okay. Particularly Germany, which is worrying. So German economic data is certainly to watch in future. UK trade balance is coming out at 9:30, but quite honestly that very seldom moves the market. In the afternoon, no real US data of significance. Wholesale inventories is CAD focused really, so any of the live guys, if you are trading FX, that does actually provide a lot of volatility to the CAD specific currency. So you can watch that at the time. That CA6 is the CQG ticker. The one event, though, that probably is worth making sure you're at your desk for is Rosengren. That event, 12:45, make sure you are at your desk at that point in time. As I said, given Rosengren a leaning dove, will be interesting to see if the hawkish rhetoric is maintained. Okay, guys, gonna finish there. So enjoy your day, and I'll catch you in the chat room. If you have any questions, please do ask, and I'll be happy to take them. Okay, have a good session.